Alright, Swell Gang, I'm here to help you all today. This is going to be a rough draft tutorial. I'll be uploading a much more better, thorough walkthrough of what this shit is. But I just want to introduce y'all and break y'all into some stocks. If y'all don't know what the fuck y'all are doing, it's okay. This is not going to be the best explanation. I'm just going to try and run through this shit just to show y'all I know what the fuck I'm doing. But I'm going to give y'all some affiliate links to some shit y'all can sign up for, get some free stocks and some other opportunities if you all click on my links, join the 5K challenge, yada yada yada. But I really just want to show y'all that anybody can fucking invest. I don't care who the fuck you are. I don't give a fuck if you only got $5, nigga. That is enough. Y'all niggas make too much fucking excuses and y'all be scary as shit. Y'all think the stock market is only for people with hella money, or like, I don't want to, YT people type shit. Like, y'all need to get the fuck over yourselves, especially if you look like me. That's some bullshit. So I'm here to show y'all a little bit of something, you feel me? This is not going to be a complete thorough walkthrough or nothing like that. This is just going to be running it. I'm just going to, see what we can do for y'all niggas. So let's just get in there. So what is a fucking stock in the first place? Like, what is the stock market, my nigga? It's an ownership of a corporation indicated by shares, which represents a piece of a corporation's assets and earnings. Meaning, if you buy a share on the stock market from a company, you own part of that company. So that is lesson one. You know, feel me? Just because now that we know what a stock is, we know that you niggas from the hood, niggas around me, niggas that live in my neighborhood, people that I decided to get the fuck away from, y'all niggas are fucking up bad. And excuse my language. I'm sorry for anybody that came here and wasn't expecting, this type of mouth, but hey, it is what it is, man. I'm here to be myself. And y'all niggas is fucking up because y'all wear the Gucci, the Louis, the Prada, the fucking Bape, and all this other extra shit Harachis, but y'all don't own nothing. Y'all don't own shit. Y'all literally don't own nothing. Y'all go and buy the clothes and look the part, but y'all don't own shit. You feel me? I'll buy Nike before I own it. Like, I'll go buy the stock, go buy a share of Nike before I go buy some motherfucking Nike shoes. So, yeah, that's a stock, bro. Stop being played. Just off of that information, you should know that you are being fucking played, or you're being retarded, you're being stupid. So a climb or a fall is basically if the price goes up or down based on what investors are willing to pay for the stock. So if a stock is 10 cents, you don't got 10 cents, there is 10-cent stocks, and I can show y'all. But I'm just, this is just for example, but there is 10-cent stocks, meaning there's no excuse. You feel me? And if you buy 100 shares of a 10-cent stock, how much you think that is? $10. So boom. If it goes up 1 cent, then you make 1 cent off of each share. And if you have 100 shares, you make $1. So if it goes up 11 cents, you made $1 off of 100 shares. That is multiplication. That is increase. That is what God is all about. God is multiplication God. And if you're not here for God, or you don't believe in him, I apologize. So stock price appreciation: buy at one price, sell for later at a higher price. So it goes back to, you buy at 10 cents. Let's say you bought 100 shares. It goes at 1 cent. Congratulations, you made $1. So if you put $10 on a 10-cent stock and it goes up to 11 cents, then you made $11, I guess. No, you only made 100, because 1 cent times 100 is $1. So for example, if it goes 10 to 20 cents, you made $10. So the more shares you have, the more money you make off that penny. So if I buy 10,000 shares and it goes up 1 cent, I make 10,000 pennies. How many pennies is that? Do the math. Do the math. Because 1,000 pennies is $10. So if I get 10,000 pennies, that's $100. You feel me? I don't think I need to pull out a calculator for that shit. But that is the potential of stocks. And I'm just using pennies for an example, but that shit adds up quick. And penny stocks are volatile, but if you don't know what volatile means, we'll cover that probably in this video or another video. So a dividend: a portion of a company's profit paid to the common and preferred shareholders. A stock selling for $20 a share with an annual dividend of $1 share yields in the investor $5. So $1 is 5% of 20. So let's say I have 100 shares or I have $100 of 100 shares. So that's $1,000, and they give 5% dividends off of each share. So I have $1,000 worth of a $100 share, but the price is 1,000. That's how much is in the company. That's how many shares I hold. So if I get 5% per share, what is 5% of 1,000? $50. So let's say they do a dividend every month. That means I make $50 a month while keeping money into the company and shit. So this might go over y'all's heads, but it's just how to pick stocks quickly. The share price has nothing to do with the value of the stock. So a $5 stock can be overvalued, a $100 stock can be undervalued because of market cap, which is the total dollar value of a company in the stock market. Circulation, multiply outstanding shares by the price per share. Large market cap is above 10 billion, medium market cap between 2 to 10 billion, small market cap below 2 billion, mega market cap above 200 billion. So this is price to earnings ratio, which is price per share divided by the company's earnings per share, EPS, earnings per share. And then here's enterprise value, which is market cap plus all of the company's debt minus their cash. So that's kind of like your net worth in a sense. And what is this useful for? Company buyout and getting a more comprehensive view. So this is really for like looking for decent companies to even invest in based off your moral ethics and all that other shit. But if you are an analytics guy, this could also help. So this is all, I don't know. Y'all can take a screenshot of this shit. Just take a look at it real quick. Boom, boom, boom. So this is enterprise value, which I already showed y'all. Price equity, I believe. No, price to earnings ratio, which is price per share divided by the company's earnings per share, which is the EPS. And then these are the different price earnings. Usually attached to value stocks, so like the pennies. High PE, usually attached to growth stocks, so ETFs, long-term stocks, S&P 500. If you don't know what that is, it is it's a portfolio, like a file of stocks, like 500 of the best performing stocks. If one doesn't work, we pull it out, replace it with another nigga, just like your 9 to 5, no deal. So PEG ratio, PE, price to earnings ratio, dividend by the EPS growth rate for a specific time. Usually 3 or 5 years. PEG ratio under 1 is generally considered good. So this is all like terms that might go over your head and shit. So this is all notes that I took down when I was 19. I'm 26, so it's been some time now. But this is still useful information. And y'all can see where my head has been at for the longest. You feel me? So now we're going to talk about we need to talk about this shit. So this goes into what are stocks, what are ETFs, day trading versus long-term investing. So let's do this. Where is that shit at? Boom. So we're going to go back over what is the definition of a stock, also known as equities or shares represent ownership in a company. When you buy a stock, you are purchasing a small piece of that company. Companies issue stocks to raise capital or various purposes, such as expanding their operations or funding new projects. Ownership. Okay. Ownership. Stockholders have ownership rights in the company, which may include voting, shareholder meetings, and receiving dividends. Risk and return investing in stocks can offer the potential for capital appreciation, the value of your investment increasing, which is what I explained with the whole penny analogy, but also comes with a higher level of risk compared to some other investment options. Stock prices can fluctuate significantly based off market conditions and the company's performance. So that means if you buy a stock at 10 cents and you check back in a month and it's 5 cents, you lost 5 cents. Let's say you have one share and you bought it for 10 cents and it's 5 cents now. Then you lost 5 cents. So if you buy 1,000 shares of a 10-cent stock, you lost 5 cents on each of those shares. So you lose money. But the thing about the market is it's all about patience. Most people sell when the motherfucking price goes down, which is the stupidest shit you could do. The best thing you could do is not get emotional. Hold. Over time, things inflate all the fucking time. There's always market corrections, which y'all will begin to understand in a bit. But I just want to talk about some candlesticks because this is what's gonna kind of get y'all to the motherfucking money, is understanding how to read this shit. All right, man. This is what helped me make pretty good money, is just understanding how candlesticks are, the nature of volatility in stocks and shit. So right here we got, hold on, I'm fucking up. Boom. What does it say? 3 simple ways to use candlestick patterns in trading. So I'm gonna show y'all clearly. I got illustrations of the candlesticks right here. So 3 simple ways to use candlestick patterns in trading. Look at candlesticks in 2 different ways. We're gonna get into that in a little bit. I'm gonna show y'all how this looks on a graph, and this is the reason why niggas is scared of the stock market. They see a bunch of fucking numbers and patterns and shit that they don't understand, but it's simple math and multiplication. And when you understand the nature of a graph on a stock market, it is not the fucking same as like graphs y'all got terrified of or traumatized in high school, I promise. So let's check this out real quick. So these are candlesticks, right? All this shit is a candlestick. Does this scare y'all? If it scares y'all, I am so sorry. Did you know that knowledge gets rid of fear? Because you guys typically fear the dark end, which you don't understand. And this is shit is, I promise you, it's very fucking simple to understand. Like, all you have to do is put in some fucking elbow grease and stop being a little bitch. You see this stock is 24 cents. There is no excuse. There's no excuse. If you got $5, you could buy this right now. If you got $24, you could buy this. You could buy 100 shares of this stock right now. It used to be $62, but it shot down. But you know, it might bounce back up. I'm not going to give y'all financial advice, but I do have investments in SGBX. But my point is, why the fuck do y'all think y'all, because y'all don't make a lot of money, y'all can't invest? When there's a stock as little as goddamn 24 cents on the market right now. As a matter of fact, I can show you a cheaper one. This shit is 9 cents. So what the hell are y'all doing? Go learn some shit. I mean, hopefully that's why you're here and you're still watching me. If you clicked off, oh the fuck well. So these are candlesticks. Don't let this shit scare you, because I'm gonna show y'all niggas how this shit even is supposed to be read, how it looks, how to fucking crack codes and saves and shit. It's like really not that hard, I promise. So boom, we're gonna bring that back up. And we're gonna bring this back up. All right, y'all. You're gonna join the rodeo with me real quick. That right there. You go right here. All right. So 3 simple ways to use candlestick patterns in trading. Look at candlesticks in 2 different ways. Trending candles and non-trending candles. Consolidation. You want a candlestick that confirms your direction, whether it is long or short. So, candlestick basics. A bullish candle is when the candle or the close is higher than the open, usually green or white. And a bearish candle is when the close is lower than the open. So this shows you how a candle works. So these two lines at the bottom of the square is called what we call shadows. So read this shit. Read it. Use your eyes. Use your eyes. The vertical line between the high of the day and the low, the close, the bullish candle or open bearish candle. Let me read that again because I fucked up. Upper shadow, the vertical line between the high of the day and the close bullish candle or open bearish candle. So right here, the price opens at 9 cents. It goes up here, maybe 10 cents, 11, 12, 12. It closes at 12 cents. So in between the time of 1 minute, it opened up at 11 cents. So right here where it says open, imagine this is a price line where this is. This is also a price line where it closes by the time this time frame is up, whether it be a minute, 5 minutes, 10 minutes, an hour, 5 hours, 10 hours, a whole day, or the whole day during the stock market. So if it opens here and let's just pretend this is 11 cents, bro. That's a happy face, I guess. But this is fucking 11 cents. Actually, that's trash. All right, let's make it less. We gotta make that thinner. So 11 cent, boy. Bad. Whatever. So this is 11 cent. The price goes up. Come on, work with me. And it closes at 13. Boom. Boom. You see that? So it opens at 11. Price goes up. This is the highest the price went for the day, but it came back down, close here. So let's say the high was 15 cents. So this is the upper shadow, 15 cents. Let's say the low is 9 cents right here. Boom. So that's what this is. And this shows you where the highest price, where it was in a time frame. Man, get that fucking hand out of here. Feel me? So hopefully you understand that. Let's get rid of this shit. So, and this is basically the opposite. It opened here and then closed here. This is the low, this is the high, and it tells you how low it went, how high it went for that time frame. Okay. Oops. Whoops again. All right. Real body. The difference between the open and closed colored pattern of the candlestick. Lower shadow. The vertical line between the low of the day and the open or close. Consolidation patterns. Typically weak candlestick patterns that have close to an close to a, aka if you're looking to go short, get a bearish confirmation, and if you're looking to go long, get a bullish confirmation candle. Even the chance of resolving in either direction, i.e. less than 1.5 times as likely to resolve in either direction. Right? All right, man. I'm gonna just call it right here, and we're gonna get into the daily law, and I will edit this shit hopefully.